You know how I like my turkey, Dark Side? A little on the dark side.
Don't look now, but Bitcoin is on fire.
This thing is, you can't kill it.
You have to find something that you can trust in a trustless world, which is Bitcoin. You know,
It is a asset class that protects you.
Right. The U.S. federal government's on unsustainable fiscal path. The U.S. federal government's on unsustainable fiscal path.
You do not sell your Bitcoin.
Prices determine the value.
You do not sell your Bitcoin.
Prices determine the value of money.
Bitcoin today, tomorrow. Dark Side? How are you? Let's kill this. Let's kill this stuff right here. Or should we say hi to PSG first? Hey PSG, how are you, sir? Good to see you.
Good morning. Can you guys hear me okay now?
Yeah, we hear you just fine.
Yeah, I hear him. Just what's
Yeah,
wrong?
you
Why does
got
he
him,
always do
Terrence?
that? I hate it when people say, "Can you hear me?" Just start talking.
Yeah, right? No, we can hear you.
Try
We'd
try
let you know
to
if
try
we
him
couldn't.
again.
Yeah. No, we hear you, buddy. Are you still around there, PSG? Or
Good morning. Can you guys
oh
hear
yeah,
me
good
okay now?
morning. Yeah, we hear
Okay,
you.
so just drop him. It's just getting
Okay,
ridiculous.
sorry, PSG. This is insane. The first actual rice and beans show, the inaugural premier rice and beans show, will be next Tuesday. Terrence, are you excited? You're the
I
beans
am.
in this. Yeah.
Yeah.
Eric Rice will be hosting along with Terrence. And I hope you folks like your meat like you like your spaces on the dark side, because Dark Side is hosting on Thanksgiving. So that'll be fun. Dark, are you there?
And the best part is Dark
Mhm.
doesn't ask if we can hear him. Watch. So listen,
Can you hear us,
PSG.
Dark?
This is how
Dark,
it works.
I can't hear you, Dark. No, PSG.
How we doing
Good
today,
morning. Can you
gentlemen?
guys hear me okay now?
Yeah.
Top of the day to you, PSG.
Good morning. Can you guys hear me okay now?
Yeah, we hear you. Gosh, that guy. He's stuck in vacation mode, I think. Anyway, yeah. So Dark, excited about the Thanksgiving coming up.
Yeah, it's going to be Dark Meat Thursday.
Dark Meat
Dark Meat
Thursday.
Turkey Day. Yeah,
I like white meat, actually. I was just trying to play on this whole dark
I'm
meat
me.
thing. Yeah, you like it
I'm me.
dark, huh?
I'm back of the bird, man. Back of the
Back of the
bird all
bird.
the time.
Flip it over. Flip it over. I want the
Some
dark
people
meat.
like half white meat and half dark meat.
Is that what
Just
you are?
saying. Well,
Beans?
a little bit, yeah. I'm a hybrid.
Bread. Anyway, I digress. Who jumped up here? Phil? Phil was up first. Phil, how are you?
Good morning. Doing great. The one thing I wanted to say, when I first started buying Bitcoin in 2018, I felt like the November crash of 50%
Mm-hmm.
hurt more than that this feels
100%.
right now.
Yep.
But, back then, all I would do every week, $60, $60. That's all I had. Now, you get a
Hey,
good
Phil,
position. Yes.
did you know that Terrence actually started buying Bitcoin in 2006?
He must have been a time machine man.
Anyway, sorry to derail you. Go on.
No. I love you guys. It's good to bring the community together, get people to talk about it. But man, this is freedom. Bitcoin is freedom. It's the way
Sovereignty,
out of,
baby. Yes.
not to take some other words. Don't pay the pedophiles. Take yourself.
Preach,
Own
Phil.
your own
Preach.
your own money and be able to have your own sovereignty. So I love you guys. Bitcoin is here to stay, and we're all here for each other. So make it happen.
Or
Yeah,
remember
Phil.
when people would show up in class and they didn't like study for the quiz and they would just try to guess the multiple choice or just try to fake it. It's like when we have market corrections, I feel like it wipes out those who haven't studied. It's like, do you really understand Bitcoin? Like one, why are you nervous? Two, why would you sell on emotions? And three, you just want more of it.
Right. Yep.
I want more.
Absolutely.
Hey, Terrence, I think he was trying to do an imitation of someone.
Let's see. Let's hear it.
No, he was doing the I'm not paying my frickin' taxes. That's it, I don't care.
Oh,
Don't
was he
give the
G
money
Money?
to the
Was gonna
G
call us a
Money.
bunch of LinkedIn pussies? Okay, got it.
don't give your money to the pedophiles.
Don't give them to the pedophiles.
I love you guys. I'll drop down, but
Love
hey,
you.
keep it going.
Terrence
Keep it
is
going.
gonna start selling soap that's formed in the shape of a Bitcoin bee, but it's on a rope. The Bitcoin bee soap on a rope.
Yeah, I
Anyway,
mean, all due respect to G Money, but like, I wouldn't do well in prison. Okay, just saying.
you would love it. Paul, how are you, sir?
Doing well, guys. Hope y'all are doing well this morning.
Stay right there. Wherever you are, you sound amazing in that location. So
Terrence, I'd like to say I don't think anybody does well in prison. I can't imagine anybody here would think, "Oh yeah, I want to go to prison." But G Money, you know, he is not going to pay those taxes. So whatever comes with that, I mean, at least the guy's got conviction, right? Um,
But this is
uncooked
what's great
chicken.
about Bitcoin, right? It is a peaceful protest. You know, we know that inflation and money printing is theft. We know it's a phantom theft on us. It literally steals our past time. And so we can opt out. We can be on a Bitcoin standard. And if you handle your Bitcoin properly and hold it in self-custody, you don't have to sell it. It just becomes your money. You can spend it and you can borrow off of it when you're smart and responsible.
unless
So,
you're in prison and then you use
well, I don't
postage
pay
stamps and
taxes on
cigarettes.
Bitcoin because I don't sell my Bitcoin.
Terrence has been to
That's
prison.
right.
Terrence, have you been in prison? Have you ever stepped foot in a prison?
I haven't even stepped foot in a jail, so I don't know what's going on. I watch
Well,
movies though. I've watched enough movies to know that it doesn't look like I want that kind of intimacy and love.
I literally used to go with this group from church and play volleyball against prisoners for like an hour, just as like this outreach program. I didn't even like going in for that hour. It was just super uncomfortable just then. So yeah, definitely wouldn't want to
yeah,
spend time in prison. Go
Terrence,
on.
I think you have been in prison because you were in the real estate industry, and as I learned this morning, the word mortgage, it's a death pledge in Latin. So, I mean, in a sense, most of America is in prison, um, and of course, Bitcoin sets us free. And if you hold it properly, and you don't have to pay taxes on it. That's the beautiful thing. Terrence, want to let you know I turned somebody on to your book
Whoa, whoa,
yesterday.
whoa,
It's
whoa,
the
whoa.
first one I go to.
Oh, okay. Glad you finished that statement.
Why?
Yeah,
What did you
Uh,
get ready to? What did you think I was going to say?
I don't go there. I've learned to stop with this silly,
I mean,
sick
look,
eighth grade sense of humor.
it's not for everyone, but if you are thinking about taking a small loan on your Bitcoin, if you want to access fiat and not sell your Bitcoin, these are the times when you want to do it when it's down,
This is
down
not
down in
financial
the dumps.
advice. And Terrence, you need more
No, it's
pictures in
Bitcoin
that book.
advice.
I need a big, huge picture on every other page, or you've lost me.
Love you
You need a pop.
guys.
He needs a
Enjoy the
pop
show.
up book.
Ooh, that's a brilliant idea. Thanks, Paul. Who was up next? Nova? Nova Noodle. How are you, sir?
Hey, good morning, guys, and Bitcoin family, and TGIF, man. It's Friday. Great day.
TGIF. In the back channels, we're talking next Vegas meetup, April. Keep that in the back of your minds because we had a great time last time. Who else is up here?
Wait,
Hoff.
real quick.
Yeah, yeah,
What are you
yeah,
talking
go.
about? Why April? Did I miss something?
Because April is after March. No, April is the next Bitcoin conference in Vegas. So we're planning our side event. Eric Rice found the location last time, and so he said he's going to go start scouting locations next week. So hopefully it'll be closer and not down on Fremont Street where everybody
Maybe
has to.
maybe Dark can help us because I think he
Ooh,
knows that area.
dark.
Yeah. See, you're
Dark, do
not
you know that
thinking, Lauren,
area
are
at
you?
all? Not at all. Dark. Dark's
He's
probably
had
in the
enough of this
he's in the
nonsense, Lauren.
shitter. There he is.
Yeah, I'm finding it tough to wake up this morning, man.
Drink a couple of
I
cups
just
of
can't.
coffee.
I just can't. Yeah, I think I need another Diet Coke.
Drink another Diet Coke.
Another Diet Coke.
Another Diet Coke. TC, buddy, what is up?
You know, you're not just supposed to stack sats, you're supposed to stack bear markets. And if you got a few bear markets in your stack, you know that the previous situations were much more drastic, much scarier, much more severe. And yet the crying and whining is much louder now. Do you think it's maybe the fact that we're 24/7 connected to so many people here through the internet? Maybe.
Eric Rice of the Rice and Beans Show just hopped up on stage. What's up, Eric?
Howdy, howdy. I think we should call it the critical rice theory. It's better. But
Ooh, that's a good
I
one.
like that. I think we should call it the Frank and Beans.
That was my old podcast.
Oh, what's that?
That was my old podcast. Yeah.
Let's do it.
Yeah. No, guys, I about 3 months ago, I set some just ridiculous buy orders. I'm like, Bitcoin hits 82, 85. Most of them have been hit, and that is awesome.
Congrats.
Keep doing it. The setup is amazing. Scott Bessent was just at PubKey in DC. I mean, these I don't know. I think Dark hit it on the head the other day. There's a coordinated attack against it for some reason, and this happens every 2 years, 3 years or so. So, you know, conviction's conviction, faith is faith. Conviction in Bitcoin, faith in God, everything will be fine. Just give it time. Everything just needs time. We're all impatient.
Is fine already. Yeah.
Did you pick up more Satoshis, Eric?
I have my my checking account has withdrawals every 2.5 to 3 hours for the past 6 to 8 days.
I think what he was saying when he was talking about his 82 buy orders being hit, I think that's what he was referring to, Terrence.
Lots of sats. Lots of sats picked up.
Well, I didn't have any extra fiat, so I know Simon Dixon would not like this, but I did borrow off of my Bitcoin to get more Bitcoin, and I did it very responsibly, spread out over several different platforms. You know what? I'll be honest. I've done this twice before in both bear markets of past epochs that I've lived through, and because I just pay attention to these, and and you know, I've been in the lending world my whole life. I used to own a shark loan business before I owned my mortgage company, so I'm monitoring things and I'm doing it responsibly. But this allows me to get more Bitcoin. I have substantially more Bitcoin because of doing this in the past. And again, it's not for everybody. You have to be very, very careful. But I just want to take advantage of this because I feel like in the next month that, you know, it'll double or triple the interest rates that I'm paying anywhere. So
basically what Terrence is saying is lever yourselves to the nuts, people. We're fine. Nothing to see here. Max out your credit cards, mortgage your home, sell your children and your kidneys and shares.
Dave W had a nice little 9-minute video this morning.
Yeah.
Can you not hear me? Do you just
no,
when there's space in between words,
people
so people can understand each word.
Too.
It doesn't mean
I'm just trying to gank that soapbox out from under you. There's Dave now. Dave, how are you, buddy?
Oh. Fine.
Nice.
I'm fine. I did my morning catharsis. I admitted to being wrong publicly because sometimes you have to do that. But I think that my instinct switched from this morning when I woke up in the middle of the night last night and made the absolutely ridiculously dumb mistake of saying, oh, let's look at CoinMarketCap and see how things are going. And I saw like an 80,000 handle, and I thought about it for a second. And I got this feeling in the pit of my stomach. And I said, well, I know I'm not going to do anything about it, but boy, this sucks. And I went back to sleep. I woke up this morning and I realized that feeling in the pit of my stomach, which I have schooled myself not to do anything about, is likely creating all sorts of stupid decisions on behalf of a lot of people. So I felt the need to explain it. And so that's what I did this morning on a quick video in my workout clothes, because I didn't really want to spend any time waiting about it and just kind of rambled on and slammed it out. But the funny part when you talk about going balls deep, I was looking over my portfolio and all I could think is, if there's an opportunity here, buying MicroStrategy at these prices feels a lot like when the exact same thing I felt buying Grayscale when it was at a 50% discount. So think of it that way.
I'm
It's
still
ti-
stuck on you checked coin market cap for the price. Ugh.
it's times like these where, Terrence, what you were talking about, like not having fiat. This is why I bought a bunch of gold. Sold a little bit of gold last week when the run started to trickle down. Had that fiat sitting there ready to buy. It's just it's a balance of the two. I think that debasement trade model is, if I were an investor in funds or ETFs, which I'm not, that's definitely an area I'd look to, because I think you're going to see that
we should
balance out.
actually talk about that, Eric, because I think your post on that is a bit off base. But the reason for Coin Market Cap is because I generally during the day would use Coin Routes or a more professional source to look at prices. But the truth is that Coin Market Cap allows me to do things like, let's see how Zcash is doing and Solana and Tau and other stuff really quickly. And so it's just a lot easier. That's the reason. So, it's not about.
But you know what it's missing? It's missing Moscow time. Critical levels you got to see.
Look, everyone does what they're going to do. But I do think that Eric's point, the thing about Eric, you had a post about ETFs that I think is a misunderstanding. And, this notion of paper Bitcoin, which I know Dark and I disagree with, and on Bitcoin dramatically we disagree with. I don't disagree with it with regard to gold, by the way, because in fact it's been demonstrably proven and billions of dollars of fines have gone from banks creating it. And I don't disagree with vis-a-vis Bitcoin with regard to OTC derivatives that the banks might do. I think that is a real risk. But the ETFs hold the actual Bitcoin or they go to prison. I mean,
we were just talking about prison, Dave. I don't know if you caught that or not. Hey, Dave, TC's just trying to push his app, so that's all. He's just he's the creator.
Oh, thanks for the segue. Yeah, you can get the Time Chain Calendar app, and you can
Go
put
ahead,
the
take it
lock
away,
screen
TC.
widget. You can put the lock screen widget on your phone. You literally just glance at your locked phone screen, and you could see Moscow time. You could see the price if you care. It's there. It's there. Download for free on the App Store or the Google Play Store. Thank you very much, Loren.
That's why he was giving you a hard time, is all, Dave.
Yeah, no, that's cool. And look, I just want to be really clear. Like, I understand ETF plumbing better than most. I mean, for lots of reasons. It's one of the funny stories of my life that I'm on the second patent ever granted on Bitcoin. I was one of the inventors, not Bitcoin, of ETFs. I was granted patent. I was very early involved, and I made exactly $0 from Bitcoin. So, from the outside, it's one of those things. I'm not wearing a jersey. I have no vested interest one way or the other, but I understand that if somebody were to cheat in terms of not holding the assets that they claim to hold, they literally have massive civil and criminal liability. And firms that are worth billions or trillions of dollars don't do that. They do other things. Now, that's not to say that is a very different argument than the other stuff that Dark and I argue over, where frankly, there's smoke, whether there's fire or where it's coming from, it needs to be debated, and there's nuance to it. But there's no nuance on the ETFs. There really aren't. I mean, BlackRock can't afford, it's just not worth it to them. It would be like, a billionaire going and shoplifting and getting caught, and what happens. It's just, I mean, people do it, but it's dumb, and there's compliance departments to stop it. That's the only point that I want to make. It's like lumping BlackRock with others. And the other thing that's interesting about MicroStrategy, which is also worth talking about, is given all the quantum nonsense that's been talked about, maybe Saylor is right for not having his public addresses. Maybe he's not. But that's an interesting question. It's also nuanced.
Well, allow me.
The day. I think I triggered.
Hey guys, it's also
allow me to retort.
It's illegal to have drugs in prison, but I'm pretty sure there's drugs in prison.
Yeah,
prison locker.
And it's an old theory of Wall Street. Like, if the fine is less than the profit, then it's worth the trade. So, like, these are just fundamental things. My post on this, Dave, had nothing to do with ETFs. I just don't personally care about them. I care about self-custody assets, and I don't trust Wall Street as much as I don't trust anything else in this entire world. So, for me, my perspective, I know in theory that these ETFs are supposed to have the Bitcoin, and they get audited. I've run a public company. I know how it works. And in reality, you could look through the history of Wall Street, and you will find repetition after repetition after repetition of companies that took really unnecessary risks to make high profit, who paid a very low fine for it to go away. That's just the history of Wall Street, pharmaceuticals, anything associated with the establishment.
Look, Eric, I know it from the inside. So there is truth in what you're saying. but there are certain businesses that run on wafer thin margins where that risk is just asinine and they wouldn't do it. This happens to be one of those
So,
cases.
Dave, how do you explain the failures to deliver in silver in the last few weeks?
Silver is a
The
totally
the
different
SL
situation.
no, but isn't SLV an ETF owned by BlackRock?
I don't know who owns it. I thought it was
Yeah,
State Street, but okay.
yeah,
It could be. Yeah, I thought it was State Street was
yeah,
SLV, but
and they had massive failures to deliver.
right. But what you need to understand is the silver market is completely
Yeah,
FUBAR,
but
meaning you can
you
own
were
a right.
making a blanket statement about
Dark,
ETFs,
Dark.
and
Let me be very
they
clear.
wouldn't cheat. I'm just repeating what you just said. You said the
But
ETFs have razor thin
you have no proof
margins.
that anyone did.
Well, we know they did. We had
No, we don't. No, we do
massive
not.
failure to deliver.
No, we absolutely
Massive,
do.
meaning
No,
they couldn't
dude,
get the
we
silver.
know there are failures to deliver. But what if the most likely scenario by a million miles? What if they bought silver, paid money, and the people that they bought it from, the vaults that were supposed to get it or whatever, didn't deliver to them?
No. We're not talking about failures to deliver of the physical. We're talking failures to deliver of the underlying, of the
What do you mean?
ETF itself, because the ETF couldn't get silver, so they didn't. Remember, ETFs have a create to borrow, a create to loan function. So in theory, if an ETF is run properly, they should never be a failure to deliver. They just create to loan.
It's a paper
I mean,
Bitcoin war, ladies and gentlemen.
there
Go
is
ahead.
look. There's a lot of plumbing that goes on. I don't know where it is, but I have not seen anybody say that the contention is, did the SLV ETF, did iShares, that is BlackRock in that case, did they make sure that every single share of the ETF was backed by silver? That was the question.
No, because when you short a share of SLV, you create a synthetic long share that doesn't have any silver attached to it.
No, when you short a share of SLV, you are theoretically obligated to borrow a share of SLV. Full stop.
Great. So you borrow my share and you sell it
And so,
and
but
you
the
sell it to
failure to
Eric.
deliver,
Whoa,
Dark.
Let's walk through the mechanics though,
Eric
because
doesn't want that shit.
you said it, right?
Yeah,
So
don't drag me into this.
let's
No,
walk
no,
through
no.
the
Yeah.
mechanics. I borrow a share from you and I sell it to Eric. Okay.
Yep.
Eric owns a share of SLV, but it's not backed by any silver. It's backed by a promise that I'm gonna one day
Okay.
I'm gonna
Okay.
one day get
So
that
could I
silver.
explain? There, you made one mistake, and it's actually extremely important of the mistake. And it's not a mistake; it's actually part of a fucked up system. So you and I are going to end up on a very similar place. But actually, when you sell that share of SLV to Eric, you didn't borrow it; you did a locate.
Yeah,
For it
but
when
so
you
now
made
you're
the
taking
sale.
my side of the argument. That you're straw manning your own
Well,
argument. The bottom
but
line is
understand, BlackRock has nothing to do.
you've
But
created a synthetic
I'm
share
taking the
that is
side.
not backed by any
I
silver.
am telling you what happens, and I'm
You guys
saying you're
missed the pinky
placing the blame
promise.
in the wrong place. When you sell the share you are obligated to do something which is asinine. And one
But
of the
there's no
reasons that
silver backing Eric's share.
stop, please, could I
He has a
finish?
synthetic share.
You guys, when this, we're talking silver right now, but when you
It's the
interpret
It
this
same
doesn't
thing
into
that's
matter.
going to be true
Bitcoin,
in
We can be
Bitcoin.
talking
yeah,
The
Bitcoin. It's the
exact same
exact
thing
same
is going to
thing.
be true in Bitcoin, but it's not what you think. So the point is that you guys are putting the blame in the wrong place. I'm telling you the truth. Just
Regardless, 10 million,
okay,
there's
Dark. If
tens
you
of
don't want me
millions
to
of shares of
explain the mechanics,
IBIT
I
that are
won't.
not backed by any Bitcoin.
It is not what
Well,
there
like it or
is
not,
a
I know
issue.
you invented it. That's just a
I'm
fact.
trying to explain to you what actually happens because it
Yeah,
happens
I
in
believe me, I
every
know.
single
I know.
equity.
I ran a clearing
Maybe
firm. I
you do,
know.
but I guarantee you the audience doesn't because you're not letting me say how it actually works.
Hey, let's let Dave finish, and then maybe we can touch on Tom Lee's
Yeah, I love
video
to
from
talk about
yesterday
that
as well.
too. But
Go ahead, Dave.
the truth is, when someone sells short, the idiotic system that we have today, and it is fucked up, and I do agree with Dark on this. So I'm not defending it, and it's exactly one of the reasons why everything is going to go tokenized because it's going to eliminate it. The system is you basically either do one of two things. You either can rely on the fact that the thing that you're selling is quote on the easy to borrow list, in which case you don't have to do a damn freaking thing. You just sell it short, and then if you're not a market maker, you have to make delivery that, the next day because it's T+1 settlement. If you don't, within a fairly short period of time, I forgot what the rule is now, you get bought in 3 days later. If you're a market maker, it extends it out 3 days more. What is a buy-in? It means if you fail to deliver on the open of the next day, it's going to get bought in the open market and you're going to take the loss. So it's not permanent short Bitcoin or permanent short silver. It is, however, very expensive to get bought in because generally it's price insensitive buying. But that is what happens. It's either easy to borrow or you do a locate and can't actually get the borrow. But within a few days, it fixes itself up. It has to the loss of the person who did the shorting. In none of those cases, in none of them, did it actually ever get created without backing. And so the blame, if you will, is on the market, the short seller. Often, in fact, most of the time in these cases, hedge funds. And those hedge funds often do push the envelope too far and often do get caught with their hand in the cookie jar. And in some cases, like Melvin Capital with GME, they effectively damn well go broke and or pull in political favors to do all sorts of stupid shit, like putting the squeeze on Robinhood. So, but you need to understand that's not a BlackRock problem. That's not a paper Bitcoin problem. We have a crazily stupid way of handling short sales in today's modern technology because the securities loan departments of Wall Street are run by guys, all of them ending in names of vowels. It's been controlled by that same cartel for forever, basically, and it's a very profitable business that they have kept to technology away from in order for it to be manipulatable. And so all of the pathologies that you're constantly talking about source back to the enabling of bad behavior by a cartel. But that has nothing to do with the ETF and whether the ETFs are backed. Okay. Does that nuance make sense to you? Do you see what I'm saying? It doesn't mean we disagree fundamentally, Dark, but it does mean that you don't blame BlackRock or State Street or Vanguard or anybody else. That's all. Okay, I'm done with my high on the hog, nonsense. But I
Thanks,
do
guys. No, it
like
was
the
good to
other.
hear both those sides, and it's one reason that just reminds me why I love spot Bitcoin because I don't have to because I respect both of you, and it's like if you two are disagreeing on nuance, it's like wow, what can us regular people do? Hey, Lauren, let's go to Eric because he had his hand
Yeah,
up
I think
during
he was
this.
next, wasn't he? Yeah,
Yeah,
there's a couple hands down there.
I was just going to reiterate what Terrence said. I mean, just keep your life simple. Like if you're worried about these things and you have cash, like I get it. In an IRA and a 401k, if you can buy spot Bitcoin, buy spot Bitcoin. But if you have to go ETF, I totally understand that. However, if you want to keep your life simple and you're holding outside of those qualified accounts, make it simple. I don't have to worry about anybody, sourcing anything, locating anything, shorting anything, syntheticing anything. I just buy Bitcoin, I put it in cold storage, and I go back to my life. It just really is that simple.
Beautiful. Hey, did you see whose hand was next? Because I wouldn't mind
Yeah,
touching on that
New Era and then
video from
Eminem.
Tom. Okay, go ahead,
Hey,
Nira.
yeah, I had a question for Dave. So I'm not a Wall Street guy, and I tend to oversimplify things sometimes. So give me a sanity check here. It it appears to me that over the last couple of years, this has been kind of Wall Street's official introduction to the Bitcoin system. And you brought up shorting when you were talking a minute ago, Dave. I'm wondering if we are going into a recession. The big if, okay? If stocks are going down and reverse yen carry trade, all the things are coming together, and it appears that Bitcoin is going down as well. Then do you think Wall Street would be inclined to short Bitcoin ETFs? And if so, how could you foresee how that short squeeze might develop as
Yeah,
more and more
I
people
hate
around the world could flood into Bitcoin?
I don't like the short squeeze narrative, but there are a couple of things. First of all, Wall Street is so far from monolithic, it's ridiculous. There are different people who have different things. I would say that the big banks, JP Morgan, etc., are following a three-tiered strategy. Piece number one, publicly, they are going to advocate against everything Bitcoin, self-custody, stable coins, anything that modernizes the system, they will advocate against. Piece two, internally, behind the scenes, their fallback is to push regulators to give them an advantage as the rules get written. Piece 3 is they're also going to hedge themselves by being ready to adopt Bitcoin as pristine collateral, trade Bitcoin, and do all those things. And so they hedge it. And so people always say they're dysfunctional, but that is completely untrue. That's exactly what you would expect, because I saw exactly the same thing at Citigroup while electronic trading was going and eating their lunch. And so, when new technologies start eating their lunches, it is extremely clear that's what the banks will do. Now, that wasn't the question you asked, but I just want to make that clear. That's what the big people are doing. Everybody else on Wall Street, you got hedge funds who have been dying to trade a volatile asset, and they will trade a volatile asset. It just puts more financial firepower behind the same thing we've seen for 12 years. Well, actually, it's not 12 years, but at least 8 years since BitMEX really took off and perpetual swaps were out there. And so you get a lot of movement. As far as the macro goes, that's way too long of an answer. My TLDR is we've had 6 weeks of a massive decrease in liquidity due to the government shutdown working its way through the system. And so we had a liquidity burp. At the same time, we know that starting in 10 days, the Fed is going to stop their QT runoff, and the government is going to spend the $1 trillion that's sitting in the Treasury account because they have obligations to spend it. And so there's going to be a lot more money flowing into the system. I think that's a large part of what's happening. As far as recession, I think any hint of recession is going to be met by even more expansionist policy, either fiscal or monetary or both. Both will be after, when there's a new Fed chair sometime in May, and there's going to be a lot of pressure before then, but certainly on the fiscal side, because this government cannot afford the economy to be bottoming at the time that people are voting in the midterms. Because if they do, then they're going to lose. And then you're going to have 2 years of getting nothing done because all we're going to hear about is impeachment. So that is a real fear, and they're not going to leave any tools in the box, when that happens. So that's my short answer. I hope that helps.
It does. Thank you.
TLP.
Yeah, Dave, I just had a couple quick questions. Do you feel like Sam Bankman-Fried was playing by the rules and conducting business appropriately?
He's a freaking crook. He stole client money, replaced that in his collateral with coins he made up called FTT, and tries to argue that because they went up or they were okay in value, that this client money wasn't stolen. I mean, at the end of the day, he was a thief. Full stop.
Hey, I just want to give a shout out to your question is over. I just want to give a shout out to Puncher. We're all thinking about you and praying for you, buddy. He's actually flying out to put his father to rest. So you're in our thoughts, buddy. I know you can just listen while you're on the airplane. Also wanted to give Dark a chance to retort this before we jump into the I don't know if it's theory. I don't know how much truth
Well, we
is
also
to it,
might want to say hi to Joe and to
yeah,
Robert.
Joe's here. Do we still
that's
have
what
Dom?
I just said.
Is Dom here? We had Dom for a second.
Echo. No, he has to get a cat.
I think Terrence is trying to talk right now, but I can't hear him. Anyway, so where are we?
Dark.
Robert's
you said let's
too.
go to Dark.
Yeah,
Jeez,
Dark.
get back
You
to the
didn't have a
fryer
chance
machine.
to retort what Dave was saying and give your explanation.
Look,
Sorry,
man,
buddy.
if you think that Wall Street's playing an honest game, you're wrong. They're not. It's a bunch of criminals, and whether it's ETFs or whether it's other products that they're producing, they're cheating. And you can't, you can't say, well, SLV is different than Bitcoin's different than whatever. They're all the same. It's all the same shit. And the one thing I'll just say categorically, you can go on ChatGPT, look up what the short interest is in IBIT, and realize for every share that's sold short, somebody owns a share that's not backed by any Bitcoin, right? It's backed only by a promise from that short seller. So, at the very least, there's tons of paper Bitcoin. At the worst, it's an absolute criminal enterprise. And sometimes it starts as just a ton of short interest with a ton of people that own synthetic Bitcoin. And then it turns into a criminal enterprise when it gets worse. And that's usually how it goes down. That's what we just saw in SLV with failures to deliver when they can't get the underlying. Right. And that's how, to answer the question from MMTLP, that's how you get a short squeeze. is when the people that have synthetic shorts or synthetic longs, they want their Bitcoin, but there is no Bitcoin. The spot Bitcoin market doesn't have it, and then you see the dynamic, explosive moves higher. So whether it's iBid or whether we're talking about GME or whether we're talking about MMTLP or Porsche Volkswagen, you can go through just a litany of these situations. It happens. Look what happened in nickel years back, right? Where they actually just canceled the trades and said, sorry, you thought you owned nickel, but you don't. Um, yeah.
Nice.
Casino
Hey,
error in our favor.
right? They can change the rules. Terrence wears synthetic shorts, coincidentally. Boxers, too, not the boxer briefs. Full on synthetic shorts. Hey, Terrence, do you want to say hi to the others before we dive into this Tom Lee video thing?
Yeah, I wanted to say hi first to Joe. I would say hi to Robert first because he was here first, but
But
that might be a little bit longer. So let's go to Joe real quick. He speaks
what's up, Joe?
fast and he lets us know what's going on, and then let's go to Robert where we always learn.
Fantastic.
Joe,
What's up, guys? Good morning, everyone. Lauren, I'll be pulling through the drive-through hopefully soon.
Does she want the extra large this time?
Extra large.
I know this is for your wife,
Yes,
right?
yes.
This isn't for you.
supersize her, Lauren.
Yeah,
Supersize her.
supersize
Supersize
me.
her, pretty
I watched
please.
that. That guy's dead.
Absolutely. Yeah, no, things are looking dismal as far as sentiment goes. Terrence, I think I saw you post the latest fear and greed index on Bitcoin. I think it's like 10, something like that.
Yeah, it actually dropped to 6 briefly.
Yeah.
If you can believe that. I've never seen it that low.
Just completely insane. And if you look at that relative to price, they're like sentiment can be a little bit fickle. It can't be the only indicator in your tool set.
Prices determine the value of money.
That's right. There we go. Prices determine the value of money, everybody. Sentiment can't be the only indicator in your tool set because sentiment can signal a local bottom. But if you're moving into a bear market, then a poor sentiment score can be just the start of a bunch of other poor sentiment scores. So we'll have to wait and see. That said, and I'm curious to hear Robert's thoughts on this. This drawdown for Bitcoin is actually the largest drawdown that we have seen this cycle. We have now closed below the 50-week moving average, which has signaled the start of every single Bitcoin bear market that we've had. It's only happened 3 other times in history. Each time that has happened, that signaled the bear market. Now, a couple of things to remember. Bitcoin is a fundamentally different asset. It's traded much differently. And so it kind of remains to be seen how we'll behave here. I tend to think that PMIs are going to start expanding again over the next couple of months. Liquidity is going to come back online. The TGA has obviously been built up to a tremendous degree as that liquidity begins coming in, as the economy continues reaccelerating or starts to reaccelerate. I tend to think Bitcoin may be in a bull market still, even despite all of these bearish indicators. But right now we're in a series of lower lows, and so Bitcoin's 36% down from the high. That's what you have to remember. So ultimately, the easiest way to, for me, the probability of risks here is, still 60-40, 60% upside over the next 12 to 18 months, 40% downside. I'm much bullish long-term than I am in short-term. I think things will remain hairy until the middle of December, toward the beginning of January. But that's kind of where we are from I see Dave throwing up a bunch of hundreds and thumbs up. I must have said something right. But all right, that's my piece. That's what I've got. And motorcycle outside my window just revved its engine. Maybe that's a good sign.
Thanks, Joe. Yeah, I agree. I think we're just in this like emotional correction. It's like when you get in a fight with, your spouse or a friend or something, and they need to go take a walk around the block, and Bitcoin's just taking a walk around the block at the moment, and it'll be back soon. Hey, let's say hi to Bobby. Robert. He goes by Robert.
Oh, yeah. Hey, guys. So yeah, I would agree with Joe. I think generally I tilt a bullish. It all I think depends on your time horizon. If you're looking at the next month or two, there's some risks, and yeah, we could definitely see further downside.
Robert, can you just make it positive before Thanksgiving? I just at least on that day, and then we can go back to regular scheduled programming.
Well, here's a positive data point. So for the past 2 days has been generally below the Fed's upper bound. Today you did have 99th percentile at 4%, but generally SRF usage over the past 2 days has calmed down. You also have so for generally over the past 2 days calming down. So that's good. Yeah, but I kind of felt like there was capitulation sort of moment was gonna come. We've been talking about this. I think it was earlier in the week. I think we got that this morning. So when I woke up here 3 a.m. Pacific time, it looked pretty capitulatory. You had a good amount of
Wait, hold
volume
on. Pause the
starting
show.
to
Pause the show.
increase.
3 a.m. Pacific time is when you
He
wake
goes
up.
to bed at 6, Joe.
Yeah,
I don't know
yeah.
how he does. He's a robot.
It's nice. I like it. But yeah, you had that waterfall price action. You had pretty good spike in volume. Yesterday's price action on S&P, with a spike in the VIX, like it all kind of felt like there was a moment coming. We didn't really get quite the full capitulation with VIX implied correlations and the S&P 500, but we did, I think, get it with Bitcoin, which could indicate that we know Bitcoin leads to the bottom. Maybe S&P 500 is still not at a capitulation moment yet. It has reclaimed the 100-day moving average on ES at least, so that's a positive indicator for that. I hate equities. I wouldn't be buying here. It would take a lot of downside to get me to buy equities, but Bitcoin at 80K is 82. I put two orders. I got filled at 82.8 and 82.9. And I think that those will be good buys. I'm probably now up to like 40% cash. And so, yeah, if we get more downside, which there are a lot of risks with liquidity, with the uncarried trade unwind, with recession, probably missing something, AI tech bubble unraveling, the 3 month Nvidia chart looks pretty bad. So if any of those come to pass, I got a lot of cash that I can luckily deploy. If we get back down to 70, it's totally possible. There are a lot of risks right now, I gotta say. Recession, I would put it at probably 50-50. I'd be curious what Joe C thinks. But yeah, that's kind of how I see it.
50-50 for a recession?
Joe C and the
Yeah.
Pussycats. Hey,
No.
before we go to
Oh,
Joe C,
Bobby
look,
Bobby better go back to bed.
guess
I
who's
don't know about
back?
that.
Back again. The
What? Stop
cosmonaut.
the presses. Cosmo's here?
He landed. The
He's
rocket ship's
been
back
What's
on
gone
up,
for
Earth.
guys?
19 months.
He came
Loren,
back down with the Bitcoin price. What's up, buddy?
yeah, Loren caught me autistically posting about the current discussion
Yeah.
about who the
Mm-hmm.
father of Rome is, or the father of Europe is, and so I can't be bothered with the Bitcoin price right
Busted.
now. I'm too focused on the debate. So
He's zoned in. He's in the, what do they call it, flow
The
state,
Oz.
locked in.
Yeah.
yeah,
Right.
I'm
Exactly.
locked in right now. So yeah, I don't know. I have not been really keeping up with the current market movements and everything that Robert is talking about, but that's interesting. 50-50 is pretty crazy, dude. Like, give me the 2-minute TLDR on what brings you to 50-50.
Well, labor market, credit spreads have started to tick up. We've seen a change from this AI capex that's been driving GDP to a large degree. We see that starting to kind of shift in terms of both narrative sentiment. You see credit spreads widening on. Andy Constant put out a great tweet with some of the credit spreads for the various tech companies that are now financing AI capex by debt. So this is a notable shift, number one. Number two, you see increasing risk being priced into the credit markets for those AI, the Mag 7. So I find that notable. Then you look at credit spread, like high yield credit spreads. Those have been starting to perk up since July. And I think, look, you also throw in a very significant potential of a prolonged weakness in equity markets that has been keeping GDP positive, right? Consumer spending, the upper leg of the K, wealth effect, that goes in reverse. And you have cap gains tax going in reverse, and stock-based compensation going in reverse, and wealth effect going in. That flywheel starts to go in reverse. It could pick up speed and cause pretty significant contraction in consumer spending. You look at the balance of trade data yesterday, imports from China are down quarter over quarter from, I think it was Q1 to Q2 by like 45%. So that's usually, you generally see imports really roll over. before recession. So
Is that a result of the tariffs, do you think, or do you think that's just economic weakness?
I think it's both. I think the tariff front running that we saw is definitely, that has reversed. But if you look, it's still nowhere. You can tell it's not just tariff front running. Like you look at the data quarter by quarter, you can see pre-tariff, the couple quarters before the tariffs, you can see we are down from even those levels. So I think it's a bit of both, if I had to guess. But yeah, it's still kind of a coin flip, and I would still say for the Bitcoiners, look, as long as your time horizon is more than a year or two, even a recession is probably one of the single most bullish things for Bitcoin, because a recession would basically be a margin call on the debt for the U.S. government and require a huge amount of money printing. So yeah, maybe, look, even if it does come, arguably it's one of the most bullish things for scarce assets.
Yeah. So do we see a 2020 like scenario? We drop what, like 60%, and then pick up the
on
bottom and we
Bitcoin, that'd
rock it back
be,
up?
I don't know. I don't think Bitcoin probably gets much below 30 or 40. In that sort of environment, I would probably say it goes down to 30 or 40. Remember, it's down 30%. So from its 120K high, it's already down 30%. Bitcoin leads to a significant degree. Liquidity, also kind of economic strength, right? The beta with NASDAQ and all that. So yeah, we've already gotten a pretty juicy pullback. So I don't think I don't think we're going to 10K like David Levinson.
Hey, Robert, did you catch the podcast with Lawrence Lepard and James Lavish?
No, but I really like James Lavish a lot.
Yeah,
So where
so it's very interesting. They were talking about the likelihood of the big print and how it comes, and they were talking about SOFR, and they pointed out that the difference between 2019 and now is the standing repo, right? Which kind of works to keep things far more in line. We didn't have that back then. Um, but they talk about the likelihood of something going wrong and a financial institution needing money, and how quickly it can literally happen. Excuse me, overnight. By the way, I recommend everyone watch that. It was Bram Canstein, um, the
Bitcoin
podcast.
for Millennials on YouTube. Everybody should go
Yeah,
check it out. Great show.
yeah, yeah. It was a really, really great podcast, and it kind of just opens your eyes to how these guys think it's going to play out. But TLDR, Larry doesn't think we get past 2027 uh, before we run into a gigantic print. The other thing I would say about recessions is that recessions, who determines we're in a recession?
Well, 80% of states are, according to the Beige Book, 80% of states are already in a
And that's my
recession.
point, right? Like that, again, we're back to trusting the government's numbers, right? To get to the point that we're in a recession, when we all know we're already in a recession, and we've probably been in a recession for quite some time. But yeah, it's just super interesting that all of these things require honesty from the government, and I don't think we're getting it. So
Well, when I say look, the average American, the median American, has been in a depression, arguably for 2 decades, if not more. So, when I talk about recession, I'm talking about like a NBER defined. And look, like Atlanta Fed GDP now on the other side of the coin flip, Atlanta Fed GDP now has real GDP at running at 4.2%. Like, but you have to look at the components, right? It's the top 10% propping up spending, right? A huge amount of GDP comes from consumer spending. And it's only the top 10% that are spending. Everyone else is completely screwed. And then there's the AI capex. So we're like Dark and I, like we talked about yesterday, we are increasingly going into a very bizarre sort of world that I can only really describe as like neo-feudalistic. It's the haves and the have-nots, Tale of Two Cities. I had to read that in high school, AP Lit. this is how fourth turnings generally go. Is things get to that point, and then you get the kind of the revolution, or whatever, the significant change, however you want to describe it.
Yeah, and the haves and have-nots have turned into the have-yachts and have-nots, right? It's gotten that
And
bad.
the AI and the AI nots. Yeah.
Yeah.
I think Eric and Dave had their hands up. If you guys want to chime in.
Yeah, I was actually going to say what Dark said, which is, a recession is only a recession when they tell us it's a recession. We have absolutely no say in it. It's something that's dictated to us. It's kind of like cancer. A guy can walk around with cancer in his body for 5 years and he won't know until the doctor says you have cancer. So the argument over we're in a recession, going into a recession, been in a recession is a fairly nebulous one because it's a dictated term that's changed in the last 5 years. But like, how would we define that anymore? Like, I would really like the panel to assess how would we define a recession, because Robert's 100% right. Most of the states are already claiming they're in a recession, but the country isn't, but the states are. So someone help explain to a low IQ newbie like me how in the world that could be the case, because I'm just too dumb to figure it out.
Well, you have AI, you have you have a K-shaped economy, not only within the consumer, right, the top 10% and everyone else, but you also have a K-shaped economy within the private sector, right, within corporations. You have the Mag 5, Mag 6. It's not even the Mag 7 anymore. They've taken one out. I think Tesla maybe. It's now the Mag 5 or 6. You have them, and then you have everyone else. Like look at IWM, for example. It's basically gone nowhere for forever, for like a decade. So yeah, I think that once that AI data center capex story starts to really lose its luster, I think that you get a massive contraction in GDP, which is again running at 4.2 ish. That's and there have been they've looked at this and said, if it was not for Mag 5, Mag 6, and their AI capex and that kind of story or narrative, GDP would be negative.
Yep.
We would be, so.
Yeah, Rob, to your point,
Can I counterpoint that one?
just real quick, to your point, I think we're at a point, I think I read yesterday, 60% of public companies are trading below their 50-day. And we were at all-time highs. So those two things don't really square.
I don't argue the breadth, but saying that the AI capex is going to decrease is probably the same thing people argued as railroads are being rolled out, that steel demand is going to decrease.
No, Dave, I'm not saying it will, just if it did.
Well, it can't. I mean, it's like it effectively, we are, there's 3 examples, right? This is much closer to the steel example, right? The steel and the oil example around the Industrial Revolution than it is to the internet bubble when people looked at that. But people are spending more time comparing it to the internet bubble. The difference is we were dramatically short of of everything needed to expand railroads and build out factories and do everything that happened to turn America into the greatest manufacturing economy the world's ever seen back in those days. And yes, but at the same time, there were financial panics because the system wasn't countercyclical. There was all sorts of reasons. Debt was localized. It wasn't global. Capital wasn't mobile. It's not just because of the gold standard. That's nonsense. But we could talk about that at a different, much more nuanced point. But the fact is, the spending or the need for infrastructure was very, very real, and it drove the economy for a long time. In the internet bubble, we got so far so fast to the point where most of the infrastructure, the cable, the routers, everything, whether you're talking about Cisco or you're talking about Global Crossing and WorldCom, etc., we were literally 20 times the capacity that was being used, and it was all being betting on the come. Today, if you look at what between just XAI, OpenAI, and Anthropic, and obviously there are others because there's lots of niche players, lots of other models, we are way short of both the power grids and data center space and chips and compute that we need to actually do and fill out those companies alone plans, and there's a lot of them. So expecting that to decrease, that's probably a loser game. Expecting financial constraints to force it to decrease, Well, that would be true if it wasn't for the fact that our administration, certainly Treasury Secretary Bessent, totally understands what I just said to be true. And they're going to do everything they could to make sure that that flow of liquidity continues, because it's a build out that we believe from a national strategic point of view we need. So I think we have to be careful about that. Now, Bitcoin is a huge part of all this, because in terms of stabilizing the power grids, it's one of the best tools we have. And so to say that it's a strategic asset like the administration did earlier this year, it's going to end up with teeth at some point. So just keep in mind, from a Bitcoin perspective, that's a major tailwind that people don't talk about very much anymore. But it is really relevant because recession or not, I mean, look, all the talk about the K-shaped stuff, look, I've been railing about this for years, that we've been prioritizing capital over labor. We've been doing everything we could at both parties' policy level to push assets to go higher as a way of actually paradoxically controlling consumer inflation. And there's a lot of people who believe in that. Weirdly, you mentioned David Levinson. He and I disagree almost completely on the way of how everything works, except on that. He is right when he says that there is that low interest rates don't necessarily stoke consumer inflation. No, they don't. They stoke asset inflation. The assets allow people to invest, to do things, to lengthen supply chains and make shit cheaper. But that's a different story. Anyway, the point that I wanted to chime in on is, if you're investing assuming that there's going to be a recession based upon a lack of investment, a lack of liquidity, I think that's going to fail. On the other hand, if a recession starts to happen for whatever reason, this government can't afford it, and so Gary Cardone would call it extend and pretend. I think that's what you and I are saying, and that liquidity will differentially benefit Bitcoin more than anything else. I think that's really kind of the point.
Grant, did you want to chime in there, or if not, we can welcome India to the stage.
How are you guys? I hope you're all doing well amongst this gut-wrenching volatility, but I must say we are somewhere close to the bottom, if not really the bottom. And I think this is more like emotional selling, people capitulating at the at the wrong time at the bottom, in my opinion. But you know what? I mean, at the end of the day, we all know where we're heading. That's the Bitcoin standard. I think eventually Japan is showing the trailer for what's coming for the US, in my opinion. And that is that there's going to be stimmy checks. There's going to be, the yields rising, and the Fed is going to be forced to easing because, the markets are going to force their hand, just like they're doing today. Crypto is just showing the way, because at the end of the day, it's a leading indicator, not a lagging one. And I just hope that all of you are safe, sound, and happy, holding on to your Bitcoin. Even if you've sold, I don't mind. I don't really blame you, because this volatility is actually gut-wrenching. But I can only say that if you've just sold, you've actually sold quite close to the bottom, in my opinion.
We're going to be tired of winning. By the way, Loren, did you notice Grant has like a Indian accent or something? That was weird.
Very strange. I've heard Grant sing before.
What do I
Grant,
have?
how are you?
Hey, good, man.
Yeah, just you had an Indian accent there for a while.
Yes, it was very Indian.
Indian Accent is one of the best restaurants in India. In case you want to come over to Delhi, I'll treat you guys. It's in New Delhi in the beautiful 7-star luxury hotel. So I'll take you guys there. Let's forget about Bitcoin's price for the time being.
7-star. 7-star. Dude, does the hotel sleep for you there? What's a 7-star hotel?
Yeah, you've got a pool in your.
I think you just
you've got a
diluted the
private
stars,
pool.
India. It doesn't mean there's more stars. Each star is worth less.
All the rooms have private pools. That's maybe the definition of a 7-star.
I have a new business idea, Grant. 8-star hotels. 8-star.
Well, when you can't have a 5-star, you just go to 7 stars.
Yeah, we'll just skip 6. Yeah.
Hey, is there any truth about this MSTR being a fund, and that they would be delisted, because, or no, you not delisted, but they couldn't invest in it because it would not be considered an investment any longer, but a fund?
The short answer to that question is no, but there is some nuance there. So MSCI can and probably will remove it based on rules that they passed at the end of last year, or at the end of I think it was October. Had to do with more digital asset holding. So the MSCI might, but I know JP Morgan thinks that's a big deal. I think that they are. I think it's mistaken for a lot of reasons. I mean, MSCI is way bigger outside the U.S. than inside the U.S. for lots of reasons. But it's a bit about foreign investments into MSTR. You have to look through their holders to see how big of a deal that would be. NASDAQ would be discretionary, and it would be based upon if they think their financial situation is a problem, if the stock goes substantially lower, that it could accelerate it. But it's not about it being a fund. It's because they're not. I mean, they are effectively. Well, Saylor actually literally answered your question in a post not too long ago. You can. I'll look it up and repost it because I think it was a pretty good explanation. But people always focus on the index inclusion and exclusion. Just like I think that there's very little chance it'll be in the S&P in the next year or two, not because it doesn't deserve to be, but because the S&P doesn't understand, what it is, and they're going to be pretty damn hidebound about it, and it'll take a while to get them to see it. I mean, they were that way when it came to internet technology as well when it was starting, so that I wouldn't be surprised. But honestly, if I'm waiting for if such a thing happens, if it gets pulled out of both indexes and it goes to a major discount to NAV, that's when the dry powder ticks in, because I actually think the business plan makes a whole lot of sense, and I don't think there's a lot of risk at these levels. But I think there could be an outstanding profit opportunity if it goes to a 20-30% discount to NAV, and so that's what I'm kind of waiting for in order to really back up the truck, as it were.
Hey, Dave, related to that, I mean, I don't personally care, but I think there were a lot of spaces where people were talking about Misty when it came out. I see that, in share price that has dropped dramatically, I think 85%. Is that affected by any of this? Or, I mean, I guess it's just its own ETF. I guess it's still an income play though for some. It seems really inexpensive. I don't know if you're looking at that.
Sorry, I was on mute. I have not followed it. I mean, I've looked at STRC and and STRF and understanding where those are. Honestly, I think that buying that stuff at discount is probably going to be a pretty good idea as well. But I don't know anything about Misty. I'm not going to lie. I mean, I see what
It's short volatility, Dave. Do you
I
want to
see.
be
It's a
short?
covered call strategy. So
Yeah. Do you want to be short volatility right now? I don't.
I think that I think this is something I would stay away from. I wouldn't touch it with a barge pole at this point. But if Bitcoin stays in a range and stays around, it's a great play relative to being long Misty, short MSTR. If in point of fact you think Bitcoin's going to stay in a range, but effectively you're short gamma. For those who don't know what that means, it means you're short options in a large move to the upside. That either I don't know what their fund covenant says. I don't know if they're forced to buy back in, or if in fact they just take the loss. Meaning that if, let's say, MicroStrategy were to go back to a 1.3, 1.4 thing and go from back to like 250 or something, like immediately, and they've sold a lot of 200, and which they would have to at these levels be selling 200 calls. That means they either lose the $50 by buying it back, or they lose everything if it keeps going to like 500. So I don't know the answer, and I'd have to dig in. But effectively, do you really want to be selling vol at the lows? I mean, maybe. I mean, you can make money doing it if you're right. But short volatility strategies are generally what causes the short squeezes, because most traders, most banks, like the first lesson I ever got in options trading was don't be short gamma, not unless you have a very specific reason for it. And that's part of your thesis. So always clean it up on your books. What does that mean? Well, it means that you're taking options can be defined loss or in indefinite loss. I mean, you could go as much as it could. Taking that literally unlimited loss position is the anathema to most traders, and that's the reason why. Did I explain that okay, Robert? Because I think that's kind of the part of the answer.
Yeah.
So the MSTY, if you look at their portfolio, they sell weekly options and against synthetic long MSTR positions. So yeah, they don't take any losses. I mean, they don't. They will underperform MSTR if you get a large move up higher. But remember, when you look at their share price, you have to remember that every time they pay a dividend, which is weekly, that dividend is subtracted from the stock price. So the performance of MSTY is not what it appears to be if you just look at the price. Now, it has not done well, and it will never do well in a bear market. But in a bull market, it would produce income in theory, right? So regardless of how far, yes,
Or
they.
chop.
I'm sorry.
Or in chop, right?
Yeah, or in chop, right? So MSTY becomes interesting if you think MSTR is going higher. Remember, it's not an MSTR proxy; it's an income generating strategy off of MSTR.
And
So
it's capping MSTR upside
yeah, no,
in
it
a way.
absolutely caps MSTR upside. It's not designed to perform as MSTR.
Yep,
It's
yep.
designed to produce income on a weekly basis, based on selling weekly options in MSTR. So you have to really dig into MSTY to understand it. By the way, they do some call spreads. So while they'll sell, if you take MSTR right now, where we're like 170 or something, they'll sell the 180 calls, but they'll buy some 205s. So if we do get some gigantic rip up, they're not completely 100% a covered call. They actually have some upside exposure. So, the trading team there is very talented. Scott Snyder is, I think, the head trader there. I know him from my SIBO days. He was one of the smartest guys down on the SIBO. Um, they also have WNTR, which is the inverse of MSTY. It's a covered put strategy. And if you look at the performance of WNTR during this down move, it's been quite good. Again, these are just income generating strategies that you're betting on, the direction of MSTR, but they're not as Dave portrays them. That's not what they are. They're something else.
Stretch dropped all the way down to 89 at one point, which is just such an obvious opportunity to me. I mean, they just have to keep raising the dividend to get it to par, right, Dark?
Well, it's interesting. Remember, they don't have to pay the dividend. I'm not saying they won't. I'm just saying, according to the covenants of the perpetual preferred, they can halt the dividends. Now they accumulate, but the question becomes, where does the money come to pay the dividends? Right? So it either comes from selling the common stock, selling Bitcoin, or selling more perpetual preferreds. And that becomes a problem, right? And I've been pointing this out for many, many months that when you benefit one class of shareholder at the expense of another, and in this case, you're benefiting the perpetual preferred shareholder at the expense of the common shareholder, that became a problem. And the common stock, look, both Josh and myself predicted this thing would go to a 1M NAV because, because of the structure of these perpetual preferreds. Now, the good news is it got there quite quickly before the leverage could become of any really significant level, right? I think the total leverage on MSTR right now is about 12%. So look, Wall Street's going on full FUD, right? Like they are attacking MSTR, Sailor, MSCI, and removal from Nasdaq. Like you can see how they have these guys like clear in their sights, and it's just a criminal. Look, criminals are going to be criminals, right? So I feel bad for Sailor because he's kind of got himself into quite a pickle here. But you know, STRC at these levels becomes interesting. STRF's really interesting because they have a senior claim on the Bitcoin.
I see one of the Sopranos has joined us. Are you there, Wrench?
Forget about it. I'm here.
Oh, hey, Wrench, what's going
I
on?
know a
You're
guy. Yeah. Be careful what you say there, Terrence. I know a guy.
Lauren, I noticed you're back at McDonald's.
I It's been a rough couple of weeks, I guess, just because of the job.
I don't mind the price. I just need the income.
Hey,
Plus, I
Wrench,
get
your mute
free
button's the
fries.
bottom left. If you click that, we'll be able to hear you. I think Wrench has some questions. And until then, let's go back to Joe C.
Yeah, what's up, guys? Forget about it. I'm the Italian stand-in while Wrench's mic isn't working. Forget about it. I know a guy. Don't try that in Boston. That's what I'll say. Yeah, I mean, look, like to what Robert was saying, I just took a look at a couple of big data points. One of the things that I want to get Robert's thoughts on are the Chicago Fed Financial Conditions Index. That seems to be on a trajectory headed lower over the next several weeks, typically as financial conditions loosen. And this is looking forward, right? So this is looking at the outlook for December. The rate cut odds are back to basically 100%. I think they're at 75%. They were at like 25% yesterday. So odds for a rate cut in December were erased, and now they're back today. You pair that with the catalyst of the Fed, once again, expanding its balance sheet early December. Obviously, you know, they're saying this isn't QE. Technically, it won't be QE, but they will be purchasing assets for their balance sheet, right? And so whether or not that's going to have a direct impact on markets remains to be seen. But the last time the Fed did an operation like this, which was September of 2019, when we had the cash shortage in the repo market and they intervened with buying assets for their balance sheet, Bitcoin rose like 30 or 40% over the next couple of weeks. And so not only do we have a rate cut basically solidified for next month, we have a lot of the froth taken out of equity markets after, you know, these big names have sold off over the last couple of weeks. And so I said earlier in my earlier answer, I do think there's a lot of value in like mid-December to early January. I still think that's how Bitcoin is positioned. You also take a look at these technical. So I do think we will, all that is to say, I do think that we are in a good spot to avert a recession. And if need be, we've said that the Fed, we've seen historically that the Fed can step in with an even bigger program if they need to, right? We cannot have a recession. That would mean a margin call on the debt. And so the Fed will do whatever it can to avoid that. So given all of those conditions, given that backdrop, I think this is like a massive flush out paired with this huge emotional reaction, and people are reflexively selling because they're afraid. But the broader trend is that a lot of the froth in the market has been reset. Bitcoin is now sold down to really key levels, taking a look at like Bitcoin technical levels. It's completely blasted underneath the 50-week moving average. It now bounced. It bounced extremely cleanly this morning off of the 100-week moving average. We'll need to see how we close out the week and how we advance from there. But I tend to think that it's probably going to be a lot more chop, but financial conditions are slated to ease over the next several weeks and over the next 12 months after that. So I really, Bitcoin could definitely go lower from here, but I think in the medium to long term, it's kind of a safe bet that we're near the bottom, near the local bottom, if we can't avoid a recession, which history points to the Fed will do everything in its power to avoid one. So that's kind of my 2 cents on these things as far as financial conditions and the economy and likelihood of recession are concerned.
How would you compare the? Oh, go ahead, Robert.
Yeah, well, they need liquidity, right? They don't need rate cuts. This is the thing that a lot of folks still don't seem to get. It's not a overnight federal funds rate issue. It's a liquidity issue. And I would point to also to Joe's point, Lisa Cook, who is the Fed official in charge. Ironically, it's fun. It'll make you laugh. The Fed official in charge of the Financial Stability Committee. Lisa Cook now is coming out saying that the repo market stress and the basis trade, this is so funny to me because it's like, 3 weeks ago, we were, sounds like identical to what I was saying. The basis trade in the Cayman Islands, highly levered, cash, long cash treasury, short futures. This is a massive trade. It's even bigger than it was when it blew up in March of 2020, on and on and on. So now you have Jerome Powell, you have Lisa Cook, you have the former SOMA manager, Logan, you have the current SOMA manager, System Open Market Account, that is basically the Fed's balance sheet. So, the person in charge of the $6.5 trillion balance sheet, when they speak about a potential risk, I listen. And you have Jerome Powell, former SOMA, current SOMA, and now Lisa Cook, chairman of the Financial Stability Index Committee. You have all these people bringing to light the issue, the risk of the repo market tightness, and the potential for an unwind of that basis trade. I think that is worthy of paying attention to. Clearly, we know QT is going to end, here in 2 weeks or about there. I think that, we could see, what they are trying to engineer, and I don't know if it'll work, but what they're trying to engineer is bank reserves to grow in line with GDP. So kind of the steady, mechanical, very gradual sort of buildup in bank reserves. I don't think that that'll be enough. Maybe it is. If I had to guess, I would say it's probably not enough. And what we might see is an end to QT, a start of this kind of, you're right that it's not technical QE, but functionally it's injecting bank reserves. Fed is printing money, and the way it's getting those freshly printed dollars into the banking system is by buying bills. I think it's functionally analogous to QE.
Because the difference between
point,
a 3-month bill that's yielding a de minimis amount in cash is extremely small. And so effectively
nothing. Yeah. We're financing the largest country, the best economy, US, America, rah. We're financing our government in the cash market. We might as well be financing in cash. And who buys bills versus who buys pension funds? Well, banks buy bills. Pension fund is not a depository institution that can then create new US dollars. So there's a number of ways where the bill angle is pro liquidity. But yeah, like medium to long term, I do think that, it's all pointing to a liquidity increase, right? They need bank reserves. They need more liquidity. I'm pretty sure Lisa Cook in this, I believe it was like yesterday or the day before, I believe she said that that reserves are no longer abundant, which would make the second Fed official that has said that. And I know that sounds very wonky, but for Fed, macro nerds, that is kind of like a red flag. Reserves no longer abundant. That is code for holy shit, liquidity is really thin, and we gotta get some liquidity in the system. And yeah, look, Jerome Powell and all of them are incredibly worried about a 2019 repo rate crisis repeat. Jerome Powell himself said that he's worried about it or would like to avoid it, right? So I think that they err on the side of caution. We know the Fed is taking an easing bias. Trump will have control of the Fed, on and on and on. Like, again, it's all medium to long term, in my opinion. It's all very bullish for Bitcoin.
Now, for everyone's reference as well, before we go to India, the level at which reserves are considered abundant in the banking system as it currently stands are between that above $3 trillion. They're considered scarce between like the $3 trillion to $2.5 trillion band. They've been below 3 trillion. Basically, the moment that they went below 3 trillion, Bitcoin topped. And so it's abundantly clear Bitcoin has a really, really direct, not necessarily correlation, but it can really feel the pulse and liquidity conditions in the US economy. And the last time that bank reserves were in this scarce territory were twofold. The first time was near the 2020 bottom before Bitcoin ripped, and at the 2022 bear market bottom. The last time bank reserves were this scarce and the Fed reacted by injecting liquidity in one way or another, Bitcoin had met basically it had bottomed, right? Whether we're talking about the end of a bear market or the start of a bear market or the end of a bull market, right? So it's really hard at this level after a 36, nearly 40% drawdown for BTC to not be bullish on it, at least over the medium to long term. India, what's going on, man?
So, I've always appreciated Dark's comments, and I've kind of disagreed with him, and this is the reason why. You know why? Because I still don't think we're on a crack up boom as yet. The reason is that, what does Bitcoin really react to the most? I think it's not the government deficits which have been rising and, BTC has been rising as a result of that. But I think BTC actually reacts most to central bank balance sheet expansion, which has not happened really. And I think the major roadblock for Trump, as we all know, is Jerome Powell, who wants to remain in his legacy as Paul Volcker. I don't know if he stays around until May. But I personally feel what will happen, in my opinion, is there's going to be a big counter trend rally. BTC is going to really rally back up to 100, 103, 105, 110, maybe to the 200-week moving average. But then we will see some kind of bubble pop up in the AI space, which is not as yet. I mean, you look at it. I mean, the whole market went from being positive to negative in one day after Nvidia's earnings. I mean, it's as if everybody's just waiting for Nvidia. I mean, one company cannot really take everything along with it, you know. So, and the top 10 companies in the US now account for 40% of the whole market cap, which I think is the highest, in my opinion, of the weight that the top 10 companies have ever had. So, and the problem is that where do people really keep their money? They keep it in the Teslas and the Amazons and the Microsoft because they feel that these companies cannot really go down and they have the cash flows and everything. But I think Nvidia is going to be the pop in the bubble, and it's going to go down because it's a Ponzi, in my opinion. I personally feel that, and I think this could unravel in February or March. I'm not being a doomer again, but I've been always cautiously optimistic. But I personally feel that this bubble will really pop. I think the free cash flows and the trailing 12-month orders or the remaining purchase orders or whatever you may call it, this circular economy in the air is going to really. And I think what Japan is showing us is just a trailer of what's coming for the US. I think Japan is now unraveling a $1.15 trillion package, which includes also stimmy checks. Inflation is running hot. Japanese yen is at all time is kind of is 155 or what. It's kind of quite low as compared to the US dollar. But I think this is also coming to the US, in my opinion. So this is, and that's basically, if you really understand it from a macro perspective, it's a sovereign debt crisis which is unraveling. And I think if the sovereign debt crisis really unravels and we see banks going down because banks hold most of the debt, I think that's when people really realize that, you know, BTC is the safe bet. In self-custody, as Dark also says. So it's like a pro and a con. You consider it both sides. But I think there's going to be some pain in between. But eventually, BTC is going to be 500, 600K when the Fed starts easing amidst an inflationary environment in 2026 after Jerome Powell's gone. So I think in hindsight, we will all see that, you know, when BTC is 500, 600K, that we went through a lot of pain, but it was really worth it.
I was able to understand that without subtitles, and I agree. Joe or Robert, do you guys think that sort of the QE levels and interest rate drops that we had in COVID will 2026 resemble anything close to that?
It could. It would be my answer. It's certainly possible that if we get a significant rapid deterioration in the labor market, if and therefore a recession, if you get a significant widening of credit spreads, if there's a fundamental shock that kind of spooks the growth fundamental story or the AI fundamental story, I think yes. I think if you get a repeat of the repo rate crisis, I think that'll be so quick. It'll be so short lived. They will respond so quickly that I don't think you would see that much weakness. You could intraday maybe or a day or two, but nothing prolonged and 30% drawdown sort of thing. I think you might see 5% 2 days in a row or something. So yeah, but if you do get, in my opinion, if you do get a rapid deterioration in the fundamental side of things, I think you could see pretty significant drawdown until again they have to come in.
Yeah, to add on top of that, I mean, I think the Fed in recent years has tried to be more proactive than ever about these things. That's why you see Fed governors coming out and saying that bank reserves are scarce and a December rate cut looks locked in. They're trying to provide this forward guidance to make it so that these things don't happen before the Fed can act and the Fed isn't forced to intervene with emergency operations. And so, to Robert's point, he's exactly right. But I think more than ever, the Fed is trying to issue enough forward guidance that we can avoid these sort of tail risks, these black swan events, if you were. Looking at investment grade and high yield credit spreads, like they spiked into the stratosphere very quickly during COVID. They went from like an extremely narrow range, about 1% on investment grade and 1% on investment grade, 3% on high yield, to 3.5% investment grade and 10% on high yield within I think it was 3 days. I'm looking at this chart here. Currently, the widening in credit spreads lines up with Bitcoin's top, but it's been much more marginal. And so we're kind of at this odd point, this kind of on hold period before the Fed acts in December, and everybody's kind of holding, waiting with bated breath to see whether or not the Fed can take enough action to resolve these current issues that are facing funding markets and the labor market, or they'll need to, increase their intended activity substantially in order to stave off any kind of major destruction in either of these areas. And so, I think it's possible, but it all really remains to be seen. Like, we'll have to see what the Fed does on December 1st and how markets react, and whether or not we see a continued deterioration in the labor market and widening in credit spreads, or if those things loosen and tend to resolve themselves in the weeks that follow.
I do think it's interesting, right, that you have a lot of people talking about Oracle credit spreads, but again, I would point people to Andy Constant putting out some data you probably have access to, Joe, on some of the other AI, mega cap sort of credit spreads are starting to perk up too. Which to me, like, look, the AI story, the fundamental driver, as we were talking about earlier, right, that is kind of the engine for this entire fake economy we have, this AI data center sort of story, was that it was financed by cash flow, right? These companies had insane amount of cash flow. They were said this is part of the reason they did so well. Their net interest income, they had all this cash, right? Like back in 22, 23, had all this cash with high rates. Their net interest income went to the moon. But now, right now, we're starting to see some of this kind of circular revenue. I mean, the entire thing is pretty BS, in my opinion, when you look at the circular revenue, circular financing, like all that sort of thing looks pretty scammy to me. But, it was one thing when it was all being done with free cash flow. But now that it's being financed by debt, I think that presents, pretty significant risk. And therefore, watch the debt, watch the price of that debt, I think would be a good warning sign.
Loren, I can't hear you.
Yeah, I was like, damn, did I really?
am not doing, I'm shirking my duties as a puncher today, so I apologize. I heard crickets as well.
Do you
Does that mean we're
now
done?
have
go ahead.
more Bitcoin than you did a week ago, Loren?
No, I have less, actually.
And why is that? Just because you live off your Bitcoin, don't you?
Yeah, that's true. And babies needed new shoes, so
I got
provide.
I got some bull hopium for you guys. Okay, so the last time the bank reserves, Joe was touching on this, but the last time bank reserves were at this level at 2.8 trillion, Bitcoin was trading at about 17,000 per Bitcoin. Over the next year, Bitcoin obviously traded up to, bank reserves went to about 3.6 trillion, and Bitcoin went to 71,000. So, I think that there is to some degree a story of liquidity, and therefore, the only other time we've had bank reserves this low, we saw what happened when liquidity started to come back. Bitcoin again went from 16K all the way up to about 70K. So, yeah, there's some hopium.
I'll add to the hopium. I just looked. April 6th, Bitcoin was at 75,000 this year. This isn't anything new, guys. This was April 6th of 2025. Bitcoin was at 75,000. The same thing happened here. It ended up going to 124,000. It's back at 85,000. It is a volatility play on the market. It's nothing new, guys. Nothing new under the sun.
And the other thing too, people have been talking about beta, right? And like how, oh, well, yeah, but Bitcoin's going to get hurt the most if we go into a recession or, whatever the risk. Bitcoin will get hurt the most. It's like, yeah, but it benefits the most. That's the entire point of beta, right? So if you use that to your advantage and are able to strategically, build cash in certain environments, in certain regimes, and then deploy that cash somewhat strategically into a high beta asset, you're going to benefit. That is compounding interest over time. Buying dips, right? Everyone is trying to time the cycle and buy the low, sell the high. But if you're a long-term holder like I am, 10, 20 years out time horizon, the way that you compound is by buying dips. And so the more that you can add, during these periods of time, that beta, yeah, it hurt to the downside if you were buying at 120. But if you're able to buy these big dips, the beta is a benefit to you on the upside. So just kind of remind people of that too. I know everyone's been talking recently. Yeah, it gets hurt the most to the downside. Like, yeah, that is true. But like, you're missing the point, which is if you can strategically buy, in size, the big dips, then the high beta works in your favor, in the other direction. Hopefully that made sense.
Blanca.
Hey guys. Hey, question for Robert. It just kind of seems like we have such a wedge between like the macro picture just keeps getting better and better and better, but the price action is getting worse and worse and worse. And it feels like we're in such a narrative driven economy and market right now that really all it's going to take is, one positive headline from the right person to resolve that spread. I mean, that's my general. That's kind of what I feel like. I mean, I don't even know if we have to wait for the actual funds flows to revert and QE to start. I mean, I really think the activation is just going to be a narrative resolution. Is that what you feel?
I think to some degree, but I think the problem is retail, who has been buying dips, has stepped back recently over the past week. That's what I'm hearing from kind of the TradFi circles, and that lines up with the K-shaped economy and the consumer struggling and that kind of story. So like if you don't have new money to flow into Bitcoin, to flow into IBIT, if there's no capacity for the capital to flow in and therefore push the price up, if retail can't provide that and retail is not buying the dip anymore, not bullish, whatever, then it's an issue. But to your point about a narrative, all that needs to I do agree that institutional capital, and maybe the upper leg of the K, right, the capital class, they might start to deploy Bitcoin, right? They cash. They have money to deploy, right? So it could be the sort of thing where, look, retail kind of gets left behind, unfortunately, and the upper leg of the K, that those that do have capital are able to capitalize and put money into Bitcoin with a narrative change, right? With oh my God, QE is back. Oh my God, Trump is pushing for $2,000 stimmy checks. He's pushing to do a huge infrastructure bill that's going to inject $5 trillion into. I mean, all those sorts of things, if they were to come, I think that that narrative, boom, shifts kind of on a dime. But then the question becomes, okay, who has the capacity to put any money into it? Hopefully that makes sense.
Yeah, no, that's perfect. It kind of seems like it's a perfect storm, right? You've got on one end of the equation, you have an increasingly acceleratingly, macro backdrop that's just like the best setup ever I think anybody's experienced here. And then we just have, depleted price action. It just the whole market just seems it seems so primed in one direction, but also so structurally fragile in another direction. But I guess that's just echoing what people have said already. So
yeah, and volatility. One thing I've been saying for, I don't know, a year and a half now is to expect higher volatility. So this is one of the reasons I always kind of harp, don't use leverage, or if you're using leverage, do it in a conservative way, like Terrence talks about, right? Like a 30 to 50% LTV, timed somewhat appropriately, that sort of thing. That amount of leverage is probably okay, but I don't really even feel comfortable doing that. I would say avoid leverage because we're going to have more volatility probably for the next 5 years. Like we are, and this is very typical of fourth turning sort of environments. We've been in a low volatility environment for many years, and I think that 2020 was kind of the start of a shift into a higher volatility environment. So I would just recommend not using leverage, and I think that's probably the single best thing to keep in mind, because there will be increased volatility. And I would say, you can't, I don't think that you can rely on, the power law or the 4-year cycle or the pi cycle or whatever people like. I don't think you should be looking at that and just think, it's that easy, right? It's all very straightforward. I don't think it will be. I think there's a number of contributing factors. Going back to the bank reserve story, for example, Bitcoin topped October 20th of 2021. Bank reserves started to decline significantly about 2 weeks later, right? So Bitcoin is very sensitive, and it sniffs out changes in liquidity, and as Joe pointed out, SOFR spreads and bank reserves indicated liquidity issues, was part of the reason I kind of built Pash. And we've seen a pretty good decline. To get a further decline from here, I think would take a lot. Like I don't really see right now, I don't really see that, further 10-20% downside.
I think we're still going to have our green dot for this year. I think that's still going to happen no matter what, even if it's not as bullish and doesn't ascend as high as we thought it would. It's still going to be a green dot for us. Do you agree, Robert?
Dot for the year or for the
Yeah,
quarter?
I think we started the year at 93-ish, which so meaning we would have to get to December 31 and be over 93, and I think we're going to be well over it.
93, yeah. I think we end the year. If I had to guess, I try not to do short term, but if I had to guess, I would say we probably end the year somewhere between 85 and 95.
India.
I think we will end the year hopefully in the green. That's the positive optimism that we all should have. But Robert, I have a question. I mean, what do you think about private credit? I mean, in India also, private credit has actually exploded. And I think in the US, it started to become a real big bubble. I mean, in India, we had an increase of $100 billion in private credit just in 2025. And I think the US is much bigger. And I think all these pension funds that own these private credit, they've just got to market all these funds that they've invested. I think they would be in tremendous losses. And if they have to start reporting it in Q1 of 2026, and they have to market it, I don't know if the accounting also allows for it. I'm just asking. I'm curious. But I think that would be a big trigger point, in my opinion. What's your opinion on that?
I try to be humble when I don't know something. I am not very well versed in private credit, private equity. The one thing I would kind of say on it is that I think that it's maybe not systemically important, but I do think that, like, if there were serious cracks to develop in private credit, I think we would see pretty strong government intervention to backstop it. That's really the only thing I would feel comfortable commenting on.
Hey, Robert,
How would they
don't
backstop it? How would they backstop it really?
with QE, but
Well,
but
yeah,
but remember, nobody understands private credit, so
yeah.
don't
It's
feel
super
bad.
opaque. Yeah, it's super opaque. Like,
What we do know,
it,
though, is from the tricolor first brands, is that there's funny business going on. Like that's one of the cracks in the armor that nobody understands, but there's evidence now that says there's problems. By the way, don't forget the CDS on Oracle's bonds, which has been exploding. So all kinds of weird things going on.
yeah. Oracle is one of those that I was kind of referring to earlier in terms of the the AI narrative, right? It's also great. Well, then why are Oracle credit spreads, up like 100 basis points in the past couple weeks?
Well, I think that'll probably have something to do with the fact fact that Larry Ellison is now, government funded, more government funded or government supported, and put that behind them a little bit. But I really kind of want to rewind this here. So we have a lot of this. A lot of people go in the macro backdrop is great from Blanca, which I agree with. There's a lot of great macro stuff, but is it really that? Is it specific to Bitcoin that we're seeing that it's great, or we're seeing it specifically to economies around the world? And you guys should rest assured that just recently, about a few minutes ago, the House passed a statement condemning socialism. So don't worry about government spending towards any of our corporations or gathering up pieces of public companies. Don't worry, guys. They're condemning socialism while they're actually conducting it.
Yeah, that's the other thing is like, I would not bet a lot of like short approach, right? With individual names, like, and it kind of, to the private credit thing too, as well, KKR or Apollo or whatever. I don't like we are in an era now of state capitalism, right? Where you could call it socialism, you could call it state, regardless of kind of the label you want to use. We're in an era where the government will just step in. I mean, the Brookings Institute for the basis trade, for example, their proposal, if the basis trade blows up, is for the Fed to literally just assume the 1.8 trillion, 2 trillion, whatever it is, just assume the entire trade, short treasury futures and all. So like, whether it's 10% equity in this company or that, again, it goes to that medium to long term, I think, in my opinion, bullish view for scarce neutral asset, which is we are going to see ever increasing amounts of government backstops, government guarantees, stimulus, right? The stimmy checks here, or the 23 trillion yen stimulus package in Japan, right? Pro liquidity, right?
We're going to be tired of winning, Robert.
Yeah, the era of to Puncher, I see him down there thinking about you. But hope your day's not too bad. But to Puncher's point about austerity, I think that they tried that for 3 months. They cut 1.5% of the budget. I don't think we're getting anything close to austerity. I think we're getting the opposite, and that's very good for Bitcoin.
Not true, Robert. They just condemned socialism in the House, so we're not going to be doing government backstops and supporting a free market with government money. They just said it, so it must be true.
Yeah, but Mom, look, I'd be curious what you guys think. Mamdani meeting with Trump, right? The populist right and the populist left. To me, and apparently Mamdani requested that meeting, but like to me that's very interesting. I'm not a political guy, but like to the boomerang theory, right? Like to see the populist right and the populist left having a meeting like that after kind of some of the rhetoric that we've like what does that mean? Like, does it maybe nothing, but
it's going to be comedy gold. That's all I know is that meeting. I hope every second of it is televised because it's going to be absolutely comedy gold. We have no idea what's happening. Like everyone's like, well, behind the scenes, we have no idea. What I do know overtly is that Mamdani meeting with Trump is going to be the funniest thing of the weekend. There will not be a show or anything you can binge and watch that'll be funnier than Trump meeting with Mamdani if it's all on camera. It's going to be fantastic.
British, what's on your mind? We're going to be closing out here in about 15 minutes, but see you're here.
Oh, I just came in to listen. So I don't know. I mean, what is on my mind? I've just gotten off of a flight. It's been a long flight. So I'm just here to listen. If you would like me to comment on something specific, I'm happy to do that, including, an American false hope for politicians to save you guys. So what do you want to talk about, Terrence?
Well, we've already talked pretty much about everything that's going on at the moment, but just
Can I ask Joe a question?
No.
Okay.
Unless Joe allows it.
It's $900 an hour, British, $900, buddy.
Hey, Joe C.
I thought it was per
minute.
Joe,
I'm back now. What's up, guys?
Joe, you reduced your rates, man.
No, India, put it back in the basket for a second. British has a question for Joe.
Joe, did you see that wick candle down to 81 and how fast that happened? What we were discussing yesterday.
Yeah, it got picked up insanely quickly.
What did you think of that? Was that the capitulation?
It seems like it. Let me pull up
Absolutely.
the intraday
I
candle
would
share.
say
Robert, you can take over while I'm pulling the chart up.
Yeah, I would say absolutely. The price action, the volume, RSI
It just
on the
came in.
daily.
It just like all of a sudden I was it just all of a sudden just flooded in. It's so funny. We were just talking about this fucking yesterday. Like exactly that candle.
Absolutely. Yep, and we got it. Luckily, I wake up early because it happened around 3 a.m. to, I want to say, like 5, 6 a.m. Williams came out, one of the Fed governors, came out talking about, oh, yeah, no, rate cuts are back on the table, and S&P futures started to rally, and, of course, Bitcoin kind of rallied from there, too.
Yeah.
The British, if you go to India, our friend India has a 7-star hotel for you, just so you know. I didn't know they existed. They're in India. He's got the hookup for you.
Luckily, I don't really go to India too often. But if I did go, I'd absolutely stay in India's 7-star hotel in India.
Prom, I see you came up on stage. What's on your mind? Or did you have a question? Apparently you didn't. Okay, India, sorry, you can take it out of the basket now.
No, that's okay. I was just giggling and laughing all the way on. And I have nothing else to add here. Sorry.
All right, Loren, I don't know if you you want to continue. I need to jump, but I can quietly go.
Take us around the horn, buddy.
Oh, really? Okay. You got to get back to the supersizing.
Okay, bye Terrence. Bye everybody.
Oh, bye,
See you,
British.
British.
Why don't you just jump in and go first? Hey, Bit Blanca, any closing thoughts here?
No, I just appreciate the insight. Hopefully, we get a nice rally here into the weekend, and we can all sleep well at night.
Yeah, just be careful of paying too close attention to those weekends because they often don't mean anything.
PSG
And
jumped
maybe
up here.
Oh, PSG,
Yeah.
what do you think of the weekends?
Good morning. Can you guys hear me okay now?
Oh, geez,
Man.
you need to drop.
Yeah,
Hey,
okay.
where did Dark go? Dark just
Dark,
left.
he's coming down to the drive-through to grab some fries.
Okay.
Yeah, Humble jumped up as well.
Oh, Humble. Hey, how's it going?
You are loved.
I don't
Oh,
believe
yeah,
that's
no,
Humble. I don't think that's her.
yeah, no, I know that.
Yeah.
I know that. Hey, Robert, why don't we get your closing thoughts? And as part of your closing thoughts, can you tell the room why the weekend pricing, at least on Bitcoin, largely doesn't really mean anything, up or down?
Yeah, because there's no volume. You gotta to really see the value in something, you need volume. The more, this is why people say like the true price of the S&P 500 is determined in the last 30 minutes. It's because that's when the most volume trades. So yeah, Bitcoin price action, whenever you're in a low volume environment, doesn't really mean much. And I would just say, like, I haven't added any Bitcoin in a long time. Probably going back to like May-ish, I want to say, was the last time I bought some. So it feels good. I added pretty significant amount this morning, and it feels good. If it dips, I will continue to add more.
That's the way. Yeah, and so for those of you who don't understand, it's kind of like when you wash your hair on the weekend, but you don't put conditioner in it. There's no volume. So don't judge your hair over the weekend. Wait till the week begins and you put that nice conditioner in. How about you, India? Any closing thoughts? All right, I guess he's already jumped
I
back on
am
the
going.
carpet. Oh, no, there he
Oh,
is.
nope. Go ahead, Terrence.
Okay, any closing thoughts, India,
He's
or we'll
back.
go over
He's
to
back.
Eric?
No, he came off mute. India. Go ahead, buddy.
I'm just waiting for all of you to come to India when BTC is at $500,000 or $600,000 in 2026, and I'm going to give you a 7-star
Hey,
treat
India, maybe you can
by the end of 2026.
come to.
They sell spicy Bitcoin over there.
Maybe just take us all out to an Indian restaurant in Vegas during the conference when we host our Bitcoin Today gathering. How about that?
No, that's not so good. I
Damn
mean,
it.
India is going to be a better location in 2026 by hopefully December. You're all going to be here. We're going to go to Indian Accent, the best restaurant in India for Indian food, and we're going to all have a gala time.
Indian Accent, everybody. In the
As long as
seven-star
it's not a bunch
restaurant.
of baby food. Sometimes it seems like it's a bunch of baby food.
I enjoy tandoori chicken.
All right, let's go to Eric. Eric's going to close us out.
All right, guys, it's Friday. We have a populist leader meeting with a communist mayor. Enjoy that comedy gold. It's going to be comedy gold. Take the time for the week. Weekends are a special gift. They're a time where you don't have to worry about work. You can do the things you want to do. Do those things. We focus so much on the material parts of life, the material things in the world that at the end of the day, I've never seen anyone on their deathbed go, man, I wish I worked more, or I wish I bought more, or I wish I spent more. You'll always say, I wish I spent more time with my family. And I hope all of you get some time in prayer, some time with your family, some time in the sun, get outside, exercise, do fun things you enjoy, things that actually matter in your life. Hug your kids, kiss them, tell them you love them. Enjoy your weekend. God bless you all.
Eric is exactly right. It's important for us to unplug, get away from our screens. And this is why one thing I do every weekend is I go to my X feed before I decide to close everything down on my desktop. And I print out the first 100 pages of my feed. I print them out and I take a red highlighter with me, and then I go for a walk and I hang outside. And then I can just read my posts there, and I can put the red marks on the hearts and whatnot. And when I get back, I can collate all the papers and then log back in. And it's just like I never left. Yet I'm not staring at a screen. So you got to think smart. How about you, Josie?
I do the exact same thing with one edition. I hired somebody to make tweets for me, so I'll have them print out the first. Actually, for me, it's 1,000 pages of my X feed. I'll read through them, figure out things I want to quote tweet. I mark them off with a highlighter, and then I have my assistant tweet them for me. That way, I can tweet an engagement farm on the weekends without needing to get the blue light into my eyes. So that's the hack that I have. But
I
either way,
hired two people and print out 2,000 sheets and have 5 bots. Sorry.
You know, with Bitcoin down 36%, I had to cut the budget back to only just one assistant, unfortunately. But yeah, Eric, very wise words. Everybody go outside, enjoy the weekend, touch grass, be with family, the things that really matter. Price is extremely near term. I'm sure we all felt a very similar way
Prices
when Bitcoin
determine the
was
value of money.
I always get a kick out of it. I love it. How come you didn't when Robert said the price for the S&P 500 is determined? I was like, those are the two
The
words
value
from
of
the
money.
soundbite. Yeah,
Well,
exactly.
you
The
know,
value
you
of
can't
money.
always be plugged into the soundboard.
That's right. Exactly.
Joe,
I still
Puncher
can't believe that was a
just
real guy. I still can't believe that was a real human being on that chat that you recorded. I really cannot believe that. His voice is just cartoonish. Like he could make a fortune in LA doing voiceover for cartoon.
It honestly, in the things that he said throughout that space were just mind-numbingly stupid. Like it was beyond dumb. If you ever go back, and it was actually a Fred space, and it was horrible. The guy was beyond retarded.
If you have that recording, Lauren, you'll have to sometimes just play us like 5 minutes of it on a space, so for context, because I think a lot of people don't know what that means, and sometimes I fear you play that clip so much, people think prices determine the value of money, right? Which is the complete opposite. It's obviously
I'm going to
supply and
go
demand.
drill my teeth without anesthetic because it'll be more pleasurable than this
Prices
conversation.
determine the
So it was a
value of
live
You
money.
guys
space.
enjoy
Oh,
creating new
good. Puncher
thoughts.
is
This
here.
is what was being
Right.
said.
So it's like,
This
why
whole
would you
space has
spend
sounded like
extra if you don't need determine the value of money?
The guy didn't even know
Prices
that I kept
determine the
pushing the button
value of
over
money.
and over.
Trent, you should
I'll
log
just
it.
throw it up
Stop.
so we don't
Prices
have to do this
determine
right
the
now.
value of
No,
money.
but I want to hear the
Wait,
guy
you guys
talk
want me
with
to
his.
rug
Prices
Mike?
determine the
I can
value
rug
of
him.
money.
If everybody
His
gives me
name's
a rug
Mike.
show of hands, I'll rug. But let me
Fred
know.
was taking a vote if we should
But
rug it.
prices don't determine the value of money.
Just remove him from the. Let's have a
Yeah.
real
Prices
conversation.
determine the
No,
value
no.
of
Listen,
money.
Mike, shut
This
up
is
and
a
listen for a
jack
second.
off session.
Yeah, the amount of money printed determines the value of money. Okay, the supply of money determines the value of money, not prices.
Well, that would
Right?
affect prices. That would affect certain.
That was real Mike right there.
Prices determine the
Mike, you just
value
keep
of money.
That was
keep going
soundboard Mike.
backwards every time you realize you're wrong. Right? It's
But no,
the
you're saying the
supply of
same
money.
thing. Prices determine the value of money.
Mike, why don't you listen? Listen, you speak too much, man. Listen, you have 2 ears and 1 mouth. Just listen if you're really trying to learn.
Yeah, real quick, Mike. If you look at the value of money in terms of another money like gold, in 1913, gold was, I believe, $20.13 an ounce. Today, gold is, let's call it $3,400 an ounce. Right? If you take your calculator and you divide $20.13 by 3,400, you realize that the dollar has lost 99.95% of its value, right? In terms of gold.
Prices determine the value of money.
Okay, can you get rid of this guy? He's like retarded. Sorry.
Yeah,
This has been a great exercise in verbal and mental masturbation.
Wait a minute. So you just kept replaying it and they thought that it was, oh my goodness.
Yeah, we were introducing the soundboard at that time, and not everybody was aware of it. So I actually just recorded him live like 2 minutes earlier or a minute earlier, and just kept hitting the button over and over, and nobody realized that it was just the soundboard recording. So comedy
Well, I
gold.
just saw Puncher laughing, and so that's great. You've lifted up his spirits wherever he is right now, putting his father to rest. So thanks for that, Loren.
God bless you, Puncher.
God bless you, Puncher.
God bless you, Puncher.
Take us out, Loren.
I'm gonna sign off what Eric said today. Spend time with your families. Goes by quick.
Go outside with that printout. Oh, I see. Lauren of Light is working with you, Loren. She's got her hat on. Both Lorens.
What's better than one Loren at McDonald's?
Well, the other Loren,
Yeah,
definitely.
No,
A little better than you.
she's great to work with. We switch off between the fryer.
Oh, she didn't like that. She just left.
Bye, Loren. See you at the Golden Arches in an hour.
Dana said she was trying to come up. I kept inviting her, but
Dana, get up here.
I think she was too shy. She says she couldn't get up, but I don't know.
The U.S. federal government's
Kaja Gugu.
Have a great weekend. Don't forget, Rice and Beans Tuesday. Dark meat.
I just invited Dana up. She's not accepting.
Come up, Dana.
Dana, let's see. Just click accept. Let's see if it works.
Thanksgiving.
Oh, there she is.
Dana. Here, let's pause this. Hi.
This is like the secret Easter egg space where
You
Dana
stay.
speaks when everyone left already.
Or rolling the movie credits, and there's another scene right after the credits. How are you?
Doing pretty good, guys. A good space today. I've been driving my son to school, brushing my teeth, getting ready for work, so now I'm having coffee.
It sounds like you're peeing.
Yeah, well, I pee while I drink my coffee.
We are just one big tube, aren't we?
Yes, exactly.
Prices determine the value of money.
You do not sell your Bitcoin.
You are loved.
This thing is, you can't kill it. You have to find something that you can.
Good morning. Can you guys hear me okay now?
Which is Bitcoin. It is a asset class that protects you.
Right. The U.S. federal government's unsustainable fiscal pattern. The U.S. federal
Women
government's
don't pee, they
unsustainable
pee.
fiscal pattern.
You do not sell your Bitcoin. Sell your Bitcoin. You do not sell your Bitcoin. Sell your Bitcoin.
My cousin peed on my head when I swam through his legs.
That was for you, Puncher. I know you've missed it.